In today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway.
You need to be able to present your project in a certain way. That's why we have also put technical assistance. And if you can go to the next slide. So we have signed for over $100 million with NMB, FCB, CAPS, and Stanbic. I think they're all here somewhere in the room. And you will be able to contact them. How does it work, actually? The European Investment Bank gave a loan to these banks, which has a low interest rate and a tenure of up to 7 years. And the banks can then use this tenure. And most of the banks actually have started using it with even a lower one. As Gerald von NMB was saying, there's no long-term lending available. So even if you get 3 years, it's already great. And if you think now about it, if the EIB gives a 7 years loan, it means you can use it twice. Now, what I would like also to say, what is fantastic in this country, we have no default. Everybody's paying back these loans. So that's, I think, also shows the professionality of the private sector, and maybe it's also encouraging for European investors to see that the companies in the private sector here are serious. So it's not entirely free in loans, but it's linked to agriculture, food industry, and renewable energy, and then cross-cutting issues. Some are linked to, say, we promote really women in business. Others are saying we really promote SMEs, that recent ones I signed with Stanbic. But it's something which is available. And if you are interested, because this goes very fast and people are really jumping on it, maybe you contact these banks, you see what is still available. I do not exactly know what is available, but the ticket size is probably, and Jim probably can say more, but I look at him, is around $1 million or so. Is that correct? Around $1 million. So it's not for a startup really, but it's probably for somebody who is established and would like to grow. So that's intermediate lending. We are very, very much pushing together with the EIB, with our own headquarters, to do more on that, because we can see that that is a fantastic instrument, but it's not entirely in line with what we want to do on the Global Gateway. which is really working with the country entirely with bigger loans, 500 million, a billion, etc. But it's a first step, and I think it's a fantastic step. Then let's move to the next ones. So the next ones are guarantees, which the European Union provide to financing instruments. That's actually the financing institutions. That's actually less known. It's less known because it's in the process. So we have two which are there, FinFund and FMO, and we just heard from the Dutch ambassador that FMO still has issues with blocked funds. But we have 7 more guarantees which are currently negotiated, and they are depending on in what window they fall. Window means, for example, digital infrastructure, or another one on agriculture. So they have a theme. They could then also either finance equity investments, or they could give a pass-on guarantee for private co-investors. So you have another instrument here. We have also 2 emails. You can take a picture, but later we can also distribute to all participants this presentation. You can contact them, you can ask them. We have 7 more of these guarantees coming. And I very much hope, because Zimbabwe is not necessarily considered absolutely risk-free, as you can imagine. So the banks generally tend to go in the countries where they have little risks. But they had also to bring in other countries. And the 7 more guarantees are banks which have included Zimbabwe. Now, a forum like this is probably also a catalyst and trigger to show banks that something is going on and there's an interest, and I'm very much hoping that a lot of guarantees will materialize in the coming years under these guarantees. We go to the next one, blending facilities. So you mix loans and grants, and here you see the ticket size is 500,000 to 5 million, and the tenure is 5 to 10 years. And you also see what is covered and what are the sectors: junior, senior debt, quasi-equity and equity, agri-food and forester value chain. So I will not go in the details, because you can either go on the website or you can basically direct apply for an investment. You will be guided. You have basically the I don't know whether we can see it underneath. You have the web address there, but again, we can also distribute that later. Then we come to the next one. That's something we launched yesterday, and I was very proud that together with the German ambassador, we signed GET.pro. We have heard yesterday that in the energy sector, 16 billion are missing actually for infrastructure development, and we have also seen that 38% of electricity is missing to match the demand. And while, as we just heard in the panel before, there is not enough capital for infrastructure development currently, the responsibility is on the private sector somehow. It's the private sector who could drive the electricity production. And as EU, we support renewable energies. And here, what we do is, we have set up, yesterday we have signed it, a program which is GET.pro, which will act as a one-stop shop for companies where you can go and you can either get advice who can give you finance, number one, and secondly, you can get free technical assistance to make your project bankable. So you would go there and say, I have this project in renewables, who could finance it? I need so much money. You might find somebody, but that's, as I say, is only the first step. The second step is, how can I make my project bankable so that financing institution afterwards would say, okay, I give you the money. It's 2 different things. So under GET.pro, we do that, and we have an extra thing which is not related to business, that we also work with the government to support them to make a more fertile environment for investment in the renewable sector. They have a booth outside. You can meet them. You can get all details. You can ask them what you have to do. So very simple, you can follow this up. Now we come to the more complicated ones. So that's my dream. I would like to have that. And I was looking for it for a long time. Somebody, for example, wants to set up a 300 megawatt solar farm and needs $500 million. So that's a direct lending from the European financial institutions. That is in theory possible, but Zimbabwe doesn't have a good credit rating right now. And secondly, the company would need to have basically a balance sheet which matches what they would take up as a loan. I think that's also not so easy. I'm looking always at Jim whether I'm saying the right thing. So if you want to have a 500 million loan, you would have a 500 million balance sheet. Not so easy. So for over a year, and some of my staff actually got gray hair with me because I was saying we must have one of those projects. We did not manage to have one, but we would love to have one. Could be in one of the categories of Global Gateway, of course, which is connectivity. We looked into railways, we looked into fiber optics, we looked into energy production, renewable energy production. We did not yet find such a project, but it's not really easy. But it's something which we would like to have, and we hope we will have it in the future, or maybe even before a year's time. So then, if you go to the next one, I don't know whether you know co-lead, but actually that's technical advice and assistance in the agricultural sector. And basically it can give you any information you need about how to access finance. Also, when you export, for example, how to comply with export regulations, with standards. You know that the European Union has an economic partnership agreement with Zimbabwe, I've said it many times, which allow Zimbabwean companies to export duty and tariff-free any product to the EU. But however, you have to do it afterwards, and there are administrative hurdles. You have to understand what it means. There are standards. There are fertilizers you can use, not use, herbicides you can use, not use. You have to understand that, and co-lead can give you all this information for free. They have a website, and you can contact the Horticulture Development Center in Harare. Many of you will know them, and can also get the information. Again, there's a link. We can distribute it. You can contact them. Let's go to the next one. So the next one is the future. So that's which, in my view, will really unlock the full potential of Zimbabwe. And that is that Zimbabwe has access to concessional sovereign lending. The deputy governor of the Reserve Bank just mentioned that they are about to sign an SMP, a staff monitored program with the IMF, which requires a lot of reform, and this is part of the arrears clearance process. What does that mean? It means Zimbabwe has a debt and arrears of $21.7 billion currently, and because of that situation, banks in most of the countries cannot currently lend to Zimbabwe. And His Excellency, the President, has put underway this process, which I commend because it could ultimately lead to getting rid of debt and arrears and therefore open the access to concessional lending. And as we heard from the Banking Association and from MMB before, as there is no capital for infrastructure, for the time being, it's a difficult situation, and that would potentially unlock it. Now, the deputy governor said, maybe we can start with some minor debt somewhere. Unfortunately, that is not really possible because the bilateral creditors follow what is called the pari passu principle. The pari passu principle means we all go together, not one. And that means only if all of them have an agreement with the government, this arrears and debt will be solved. has to go to the Paris Club. So that means it will take a bit more time. But the good news is that we are currently looking, together with the EIB, the World Bank, and the African Development Bank, into a possible bailout of the multilateral creditors. Sounds very technical, means these institutions would potentially be able to increase the...
Can't help with the real underlying fundamentals for business. We've been here through some of the things that Nick mentioned about hyperinflation. We've been here through currency changes. We've been here through the adoption of the dollar. So we've been sort of watching and trying to engage with Zimbabwe over some very turbulent years. And I think what we found as a bank encouraging is really the strength of the private sector. And the ambassador mentioned that in his opening statement too. It is quite exceptional. And I know people who know me know that I'm a bit biased towards Zimbabwe. But it is exceptional. I think the private sector here is phenomenal. And I think that the challenges they've been through to be at the place they are is quite exceptional. And I think, and I know that the banking sector is normally ironed out as the bad guy, but I think also the resilience of the top banks here in getting through that is also quite remarkable. If you look at other countries that have been through similar changes, the entire banking structure collapsed. Here they managed to persevere through that. So I think from our perspective, we're not in the economists, we're not in the IMF, that's not our view. But anecdotally, I think that what we found is that really that continuing strengthening of the private sector, perseverance through very challenging times, and somehow achieving great outcomes. And we have a very solid, very professional private sector and banking sector. And I think that's something that, the foundations for the private sector are there. It's just the pity that we can't help build the ecosystem fully around the private sector. But from our perspective, we find it very encouraging. We want to do more. One of the key aspects of our lending facility is additionality, and we push that through tenor. So you'll see that for our facilities coming through in the marketplace, we have long-term tenors with our banks, and we will continue to push even longer tenor as we go forward. So we'll move in the opposite direction. And hopefully, as we did in the first step when we were a catalyst for the country, I hope that we will be a catalyst for other DFIs and other financiers coming in to follow suit.
Jim, just in terms of quantity availed to Zim to date, I guess it's, in my mind, you and AfricZim, I think thumbs up to them, are really the heroes. And we have Ambassador Mtrangwa here. There were people who were economic heroes who would put you guys on the podium, because AfricZim Bank and you guys have come through where no other multilateral organization or financing organization has come through. So we certainly have had the benefit of the African Development Bank, for instance, and their commitment to the arrears program, and then, technical assistance. But in truth, in terms of outright lending to the private sector, you guys are up there. So can you just quantify how much money you've actually brought to date per annum? And then also perhaps our members here will be interested in the term structure on average that you have on display. And while we're at it, we've got a private equity participant here. Tadios, if you can come through and join the panel as well, while Jim is answering that question.
Yeah. No, thank you very much for those encouraging words. I have to say that we've done a lot of hard work to be in Zimbabwe, but we haven't done it alone. The EU delegation in country has been a significant partner for us in terms of pushing this through and helping and giving us support in Brussels. And also the member states, particularly the ambassadors in country, have also been a big support for us. So it really is an effort from the European Union in general that we're here and allowed us to do this work. To date, we have signed 60 million euros across 4 banks. The actual terms are, of course, a little bit confidential, but we can say they're up to 7 years in terms of money lending out. The interest rates are extremely... The way the bank works is we're a cost-plus way in terms of pricing. So we take our balance sheet, and then we add a premium to the balance sheet. So we're not a profit-maximizing bank like a commercial bank would be. We're very much on a cost-plus basis. The EIB is one of the biggest multilaterals in the world. Our balance sheet is well over 600 billion euros, which means that we can borrow at an extremely attractive rate and on-lend at an attractive rate. And I hope...
Everything okay there?
I hope that works okay. So we can be very extractive, and that's why a lot of our lending, even without grants and funding, comes out on a concessional basis. So we're one of the, and that's a really advantage of working with the European Union, I feel, is that you can get very attractive terms. We're here for sustainable growth, so we're here for the long term. We're not interested in short-term lending, and so that's what we push through. And as I said, the biggest term we push on to, of course, the risk is handled by the intermediaries in Zimbabwe, and I can talk about other facilities we have, and so it's up to them in terms of making their credit line sustainable, and so we can only have so much say. But one of the additionalities we insist, which is a contractual obligation, is to allow longer tenure. I hope that answers the question.
Yeah. Frank, just turning over to you, of course, you being the first councillor in terms of cooperation, and credit to the work that you guys have done in bringing development finance and access for it. Maybe just a bit about your work here and what you're seeing as the outlook, going forward.
I mean, as the EU delegation in country, so as Jim mentioned, we try to facilitate the work of the EIB and other European development finance institutions. I mean, by facilitating the dialogue with the governments, with the banks, and linking it to our overall mandates in the country. Because we don't lend directly money to the beneficiaries, we always go through banks. So the first step are the development finance institutions. The main one for us is the EIB. There is another one that is operating in the country now. It's Propaco, that benefited from a guarantee from the EU, and then they do intermediate lending. So that is our role. These contracts are signed by headquarters, but then we will give our hierarchy an opinion on the justification, on the impact of these credit lines. Then, beside that, we have our own strategy. This is grant money, but that is articulated with the lending activities of the banks. So we have a portfolio of approximately 300 million euros of projects, and now we are focusing more and more our actions around a flagship, around agriculture value chains, and to a lesser extent, renewable energy. So we will push everything that is financed by the banks to support these sectors. I'm happy to see that horticulture is the most promising one. So what we do is we also, with the grant money, we complement these investments with technical assistance. We will also provide under a new program some critical equipment that will benefit from to the sectors in general, and not only to specific companies, namely a scanner, laboratory equipment. Then we will provide some information on how to meet the standards that were also mentioned and that are key to access the European market, but also to facilitate the work with smaller scale farmers, because we also have in our mandate to fight against poverty. So we strongly believe that the private sector and the economic growth is the best way in the current context to provide benefits to the country. But we also think that there can be a larger population of farmers involved in that endeavor. So that's what we do. We complement lending with grant money and making sure that it is all a part of an integrated and comprehensive strategy.
Fantastic. We have a huge presence here of farmers. May the farming contingent just be upstanding if you are in the farming space, particularly the ladies. I don't know whether it was by chance that I was mingling with them more than the gents. But just be upstanding so that we're seen. Look at that. I think our agric is well on its way in terms of access to funding. Thank you. I also am curious about our European delegation. If you are visiting Zimbabwe and you are part of the delegation, investor, banker, other than the panel, just be upstanding, please, so that we see you, identify you, and welcome you. You are in the room. Our visitors, please. Okay, some may be in the matchmaking activities back there. But just to swing away from agriculture, but Tadios, we're going to ask you, you come from Ambessa Capital. What's on your horizon as a private equity player? Because ordinarily, you know, debt finance is what we've used because unless you were in business prior to this, if you're now wanting to do a new venture, it means you need access to capital. And our private equity markets here are not that deep. What's been your perspective of opportunity, and what sort of areas have you guys been involved in, and are you passionate about getting involved in?
Yeah, thank you. First of all, thank you for the invitation. So maybe I give you a bit background information that you understand our concept, the philosophy. So basically, I used to work at the European Central Bank, Deutsche Bundesbank, and then I wanted to move to a sector where I can engage more with Africa business. So I established a cooperative of 134 small-scale farmers. That's why I can relate to the farmers. I train them, I give organic certification and access to the German market. So in this journey, many business owners came to me regarding consultancy in the area of productivity finance. So I realized most of them have similar problem: lack of management know-how, technology, and capital. So, and on the other hand, when I was engaging with German equipment suppliers, machineries, they don't have the capacity to provide technical assistance. But the machinery equipment, they are suitable for the African market. So then I saw, okay, there is a gap from this side, and then from the other side, and on the other side is also the German banks. They want also to finance on terms of ECA, Export Credit Agency facilities. And then you have also the contribution of the equity part. Most local companies, they don't have this kind of equity. So we said, okay, let's tackle this holistically by establishing a private equity fund. So we said, okay, that the target is to support the local companies by providing growth capital. And capital without technical assistance will not work, right? So this is the USP, what we are also providing, to say, we will be on your side to help you from A to B, and then go and exit during 5 to 7 years. And the sectors we are interested in are food and beverage sectors, and then renewable energy, and a mining sector. Yeah.
And in terms of funding, what sort of minimum ticket deal size are you looking at for the SMEs?
It's already, okay. Then it's in the food and beverage sectors, we said 500,000 to 5 million are the ticket size we are looking for. Yeah. So in the area of renewable energy, obviously there are bigger size. We are working with an EPC, a German EPC company. So they will provide the technical part and we provide the financial part, so we can give a good package for 100 megawatt or above. And regarding the mining we have specific target. It means the raw materials have to have strategic interest for the German market. So, and then we will help to get German off-takers for the materials. And the good thing is also that German companies we are working with, they are also interested in value creation in the country. So we can also discuss until which process can be done locally, and then it can be done as an input material to the companies.
Okay, fantastic. I want to shift the spotlight away just from specifically agriculture to the infrastructure and perhaps the dream project that your ambassador has as head of the EU delegation. We have a report that was done by the African Development Bank, which you probably would be aware of, in terms of probably up to $80 billion required in infrastructure investment for Zimbabwe. That is rehabilitation, upgrading, or new ventures. And when we hear of Global Gateway and the involvement in infrastructure projects, Frank, what do you see as the triggers to get us in Zimbabwe having access to it? I know there's a lot of work being done now on the arrears clearance program. And I would hope that within the next year or two, and Ambassador, I keep pointing out to you, we need this to happen. And you representing us within the higher circles, we would hope that we hear from Frank what would be accessible for infrastructure finance. And that is, of course, beyond the Chinese funding that's come through. But I think getting that European medium to long-term finance would be very helpful as well.
I will start answering and then give the floor perhaps to Jim, because I mean, if something happens from our side, it will be certainly through the European Investment Bank and the other members of the Team Europe, because it was also mentioned, we work together with the member states and their bank, and the biggest infrastructure projects in digital, renewable energy and transports that we finance around Africa. It's a joint endeavor, and that's really, really important, because considering the amounts, I mean, we really have to team up with the member states. The trigger, I mean, you mentioned it, that's the arrears clearance. That's the that's the bottleneck. I think that's the first step, and to access sovereign concessional lending. And as EU, we really think it is the most critical step. So we have been trying to champion the process. As you know, I mean, I don't want to get into many details, but I think it's a long way. There has been a commitment from the government. There are 3 tracks. Things are moving, perhaps sometimes too slowly, according to some. I think we all have our personal opinion, but I think everything is on paper. The government is fully aware, and we've been talking with all the ministries involved. Over.
Thank you. Jim?
I need little things to add. As Frank mentioned, I think that for us coming back in, if we could do sovereigns again, I think it'd be in the areas that Frank mentioned. So that's digital, smart digital, transportation and energy would be the key focus for the European Union. So we would look to support those first. I think what's important to understand, and I think that we stress this very much when we're talking to the government, is that these projects take a very long time water, sanitation can take just as long, transportation even longer. So, you know, there is a need to not only hopefully resolve the issue on arrears, but also to get project preparation done ASAP. And I think the government, I would hope, would take an holistic approach to sort of say, look, what are the priority areas and what priority projects should we put forward going ahead? I think it's also worth bearing in mind that debt constraints is not unique, is extreme here in the situation that it's in, but a lot of governments are facing fiscal constraints, and that's not just in Sub-Saharan Africa, but across the world actually. And so they're looking at new models in terms of how to finance infrastructure, and a lot of governments, of course, are looking to the private sector to fill this financial gap. It's an easy thing to say. It's a very difficult thing to implement. So I think that one of the things you're going to see probably is, even if the government could get to a point of clearing the arrears, there's still a fiscal constraint that would limit in terms of how much they can borrow from that point on into big infrastructure projects. And so there's a need to really engage with the private sector and to engage with the private sector early. And there's really a need from the government side to develop the skills that are necessary to help do things like PPPs and IPPs with the private sector. These are not skills that come off the shelf in a few minutes. They can take a long time. And also you've got to understand that when the government gets into these transactions with the private sector, these last for 20, 30, 35 years. They're not short term. So they need to be right. And so this is something that I always stress, that we'd love to get into these projects. We're hoping that we can help support them with the other development banks. They've got facilities that can help with this, so is the EU, of course. But it is a bit of a race, and it doesn't start on a clearance. It starts well before, and that preparation takes a very long time. And so I really encourage the government to really start moving in these areas to facilitate that when the clearance does happen, that there's a speed in terms of what we can do in terms of infrastructure investment.
Thanks, Jim. Well, these are the people that are supposed to be preparing the projects. Just again, I guess I'm a statistician somewhat, econometrician actually. And I love to always see the audience, the people in the audience. How many people are involved in infrastructure developments? Power, energy? Just be upstanding, please, so we can identify you in the corridors. So again, we've got quite a representation. Thank you. Let's applaud them. And I think the message is clear coming from both Frank and Jim, that the preparatory work, doing the feasibility studies, starts yesterday, not today. And the best time to start is actually today if you haven't started already. And I love the fact that some of the people that got up now are actually doing things. And so if you haven't started, there's merit, I think, in getting hold of a few people who are already involved in projects and doing your feasibility studies now, as opposed to when the arrears program gets clearance from the multilateral and the different governments that we owe money to. So I'm going to open it up to the floor now. And of course, Ambassador, I've been poking you. If we can get a mic to him, can we have a show of hands of the number of people that will need a mic? And just introduce yourselves and be very succinct with your questions or comments. Thank you. Ambassador, you have the floor.
Thank you so much, Nigel. And it's good that you've got this panel, in particular the European Investment Bank, whose bias is towards private sector investment. You just mentioned the gap, $80 billion in infrastructure is required for Zimbabwe to become what it should be. Now, here we are, and the ambassadors are here from the European countries. We have this gap which needs to be closed, and your companies, your countries, are home to some of the biggest capital base in the world today, probably the largest. And we are talking really in terms of scope and scale of small amounts, which I have heard being mentioned there, lending to almost SME sector. Now we have a Zimbabwe who has, in certain aspects, used private equity to create big exporting capacity. One in tobacco, the other, you heard it from the bakers, the other one now coming up in gold. That's why we have $2 billion to $3 billion. in gold production being accountable for the ZIG, what the central bank was talking about. And of late, we now have the largest steel plant in sub-Saharan Africa. And for me, capital doesn't have color. If it's a steel, it's on the chemistry investment, chemical periodical table, there is no steel from a particular country. This is beginning to generate requirements of infrastructure on a scale. Every week, 50 trucks leave Victoria Falls, Wanke, to South Africa carrying coking coal. Every week now, 200 to 300 trucks leave Manise here, it's just south of Harare, going to South Africa carrying steel. That's 50, 30-ton trucks, plying our roads, even the new one, which has been built, it won't survive. So there is already expressed demand within the economy to satisfy the required infrastructure, to shift all that traffic away from the road to the rail. And it's your job as the European Investment Bank to address those issues. If you don't, then capital has become flat. There will definitely be other investment regions or banks or competitors, and you will not be doing any service to the private sector in Europe by not helping them be part of this bonanza which is emerging between Zimbabwe and its neighbors and the world. I thank you.
Okay, it's a bonanza. Yes, we've got Nick and then the lady in red. Sorry. No. Sorry, up front here, sorry. Other team, sorry.
Thank you. I'm Jonathan Wood. I look after the renewable energy business at Cicada. And prior to that was an infrastructure banker, so it's a field close to my heart. As the ambassador here said, the volume of trucks is not only plying our roads, but plowing our roads. But no one's going to fund those without a bankable PPP model that delivers revenues back to the investors. And the issue with infrastructure is that you've got predominantly, or in many cases, local currency revenues, and the source of long-term funding is cross-border dollars. So you've got to fix that issue and provide a source of hard currency to those projects. And if we can charge dollar tolls past 2030, you may have a chance of banking those projects, to your point earlier. But I think it's back to energy. We've got a utility that is not bankable at this stage for large projects. So all the investment that's being done is commercial and industrial offtake, and that's fine. That can take us so far. But as Victor mentioned this morning, we have a need for some large projects servicing the mining sector. We can only raise that long-term capital if the Reserve Bank allows us to have either cross-border PPAs or offshore collection accounts. It's as simple as that. And we need to see that moving forward. One last point, when Nick spoke about funding, how we funded the Tadios project, we actually didn't have freehold title that we could pledge to the banks. And that's why you see so few big projects done. We had to work with ARDA and turn that lease with ARDA, who does have freehold title, into something that was bankable, and that took a lot of structuring. So we need to kind of speed things up in the future.
I think, thanks, Jonathan. You make a relevant point. And again, the headwinds of change are here, in that we are getting title. And I'm expecting that agriculture should then boom from the title that for land here. So I think that's in the oven. But I love your point around, what do we do about multilateral finance given the term structure that we have to 2030? I am still of the view, and I remain absolutely convinced, I know the Reserve Bank team is in here. I believe for capital projects, infrastructure projects, there should be an extension beyond 2030. We can't force it on people. We have the evidence of what happens as we draw towards maturity, just no credit facilities that are available. The lady in red. Then there is, I see Tawanda and...
Good day. My name is Faith, and I'm a minor, and also in education. This is to the EIB. I want to understand, we've gone, their funding, they're saying it comes through the banks. For the past 4 or 5 years, I've been going through the banks with my certificates for mining. I've got 2 copper mines, 2 gold copper mines, copper and gold, and then beryllium. But the banks have turned me away, right? Because they're saying my title, I have a certificate. It's actually written Faith. But they're telling me that it's not, it cannot be served as collateral. But I'm saying, why don't you come on board? I've just spoke to Gerard that let's talk again after this. But what I'm saying is, can't we use my claims as title? 1. Number 2, I'm mining beryllium. It's taking me 2 to 3 weeks to mine 30 tons. But if I have the right equipment, I tell you, I can produce 30 tons in 2 days. I've done that assessment, but I lost my car in the process. And all I'm asking is, and wanting to understand, yes, our country is owing. You have come to us, the private sector. Are we also going to be affected on repaying the 21 billion? I just want to understand, because all I'm saying is, I and other 200 women in mining, we have capacity to produce gold, your copper, your beryl, your gemstones, pretty much your gemstones. We have the capacity. There are women that we work with. So we also need to know, then we can romp ourselves and produce what needs to be produced and process it, add value. We also want to end up at the metal exchange market. That's, for now, that's our vision. How also are we going to be assured of, in the events that we end up at the metal exchange rates, our dividends coming back to Zimbabwe?
Okay, thank you, Faith. I'm going to actually draw Gerald. I'm hoping Sibongile, Dr. Sibongile is still here, just to respond to Faith's plea, because on the panel, you would have noticed they are, in a sense, wholesale bankers providing lines of credit through the banks, your local institutions in the main, because of the quantum of funds that they tend to get involved in. So I'm going to draw Gerald and Dr. Sibongile and any other banker that may be here in terms of funding women. I know Nedbank is quite fanatical on that front. Tawanda, you get the mic, and then there's a lady behind you. I've spotted you, and then we'll come to you, sir.
Thank you very much, Doc. Nigel used to do a program on TV called Making Money Make Sense. This question is to you, Jim. So there's a generation in Zimbabwe that understand financial instruments. I grew up from Kadoma. My dad bought what was called PAPs. I only learned later on that it was paid up preference shares. And this is, I was born in 1986. By the time I was 5, I had them. This is 1989, 1990, right? So Zimbabwe had a very mature bond market, money market, but it has since evaporated. You have explained how Zimbabwe owes the European Bank, but you still found ways to deal with Zimbabwe's private sector. But I think the reason why I started with Making Money Make Sense is that there's a forgotten generation of people who understands what it means to invest. Now you're saying you need to have money, you need to have equity when you start. You're not funding startups, you're going through banks. So there's a diaspora, there's people who went out of Zimbabwe. They understand financial instruments. The bond market in Zimbabwe is non-existent. My plea to you is, can you also look at private sector bond issuance, where as the European Union, because it's difficult. I've sat with Nigel in different forums and we have presented, we have tried to raise 300 million with Nigel together. We are told you need a AAA rated bank, SBLC. I think those are very few. I think it's Afrexim Bank, AFDB, the DFIs. So the main question I have is that do you fund financial intermediation as well as markets? Because you can give us fish, right? You can give us fish, but you can also teach us how to fish. Where am I going with this? There's a lot of people in the diaspora who wants to invest in Solgas. I'm part of Solgas, who wants to invest in Cicada, but they don't know where to go. And he has got $100 that he wants to put aside every month. In a year, that's 1.2. In 5 years, you can do the math. So is there a way where the European Union, together maybe with the Victoria Falls Exchange, issue a bond, for example, a green energy bond, where you can also tie it to carbon credits? We are following what's happening outside. If you look at East Africa, they are raising money like it's confetti. If you look at Nigeria, it's because these platforms, these markets exist. And guess what? The first people, the base are actually the locals of Nigeria, the locals of East Africa. Zimbabweans are all over the world. They have got money, even locals. I participated at an agricultural conference with Nigel in December last year. And I told the people there that my mom, she's a cotton farmer. She owns a house. She's got a 70-hectare farm. She's got 20 cows. She has money, but she doesn't know where to go and invest that money. So the bond market can be used to help startups. Then the European Union comes and then invest into startups that are already well-funded. So I wanted to ask to say, are you also working with the financial markets? The stock exchange, Zimbabwe I think is the oldest stock exchange in Africa. I think the second one is the Johannesburg or vice versa. But that has died down. So can the European Union help us launch a green energy bond or an agricultural bond that people can then participate in from all over the place, even people who are not Zimbabweans, so that forms the base on which these funds are then invested into startups, projects, then you come in with blended finance at a later stage. Thank you.
Thank you, Tewolde. Jim, that one is for you. And we'll take our second last question in this round of questions. We have until 12:30. The lady who's holding the mic and then the gentleman. And then we'll allow the panelists to comment. And then we'll have another round of questions. Thank you.
Hi, my name's Shantha Blumen. I'm the CEO and founder of Mobility for Africa, doing green mobility in rural areas for small-scale farmers. So I wanted to sort of talk about bankability. I'm a startup that's been on a journey and I've scoured this continent. We raised $6 million. It's peanuts for what we need. Thankfully, we have donors in the room. Some of those grants were from Norway, Sweden, the Infraco, we had the Dutch, the Austrians. The problem is that all that investment isn't going to realise a return if I can't raise the larger asset financing now. And I just want to say we are in a double standards world, and I challenge our European funders who fund through impact funds in Nairobi. There is a discrimination that is illogical and does not make sense. And if you're a startup in Kenya, you don't even need to have a pathway to profitability. If you go to Rome or Ampersand, who have raised millions of dollars, they are far from having profitability. They just raise more debt. But I'm in a situation where I don't need to be, I have a business model that's profitable, but I am not viable yet because I need 2,000 tricycles and I can't find the financing to do asset financing. So I understand the rules of the game, but a lot of this is judgment, and there is a bias that has to end. I invite the impact funds every day to come to this country and visit. And I'm sorry, but we need people in Europe to encourage the fund managers who sit on capital that say no as soon as I mention Zimbabwe to get on a plane and come and see what's happening.
Wow, what an impassioned plea. Okay, the last question in this round of questions. We will revisit you. I see you at the back. Yes, sir.
Thanks, everyone. My name is Abraham. I'm a vice president at BlackRock. So it's good that I'm the last one to speak here after the ambassador mentioned that in Europe, that's where the capital is sitting. And the last person that spoke now, she's also saying the same point, all the money is sitting in Europe. Myself, being a Zimbabwean, I love my country here, but I was privileged to join BlackRock in the private equity business. But recently we moved into infrastructure projects. It's now the new thing in town. And also in the private equity business, it's one of the business that is growing in Europe and at a global scale. But I find it difficult knowing all the good people within BlackRock when we try to tell them about ideas in Zimbabwe specifically. They don't listen to us, as that lady just mentioned now. They don't want to come to Zimbabwe and see the opportunities that are here. But what I realized, most of the funds that we manage at BlackRock, it's the money coming from German government, it's the money coming from French government, it's the money coming from, let's say, the UK, right? So they put strict conditions. I understand that as EU, we're getting away with notion of sanctions so that the capital can flow from Europe to Zimbabwe. But what I'm experiencing is that some of your money is moving to these asset managers, these big asset managers. One of the conditions that you put is around ESG. I haven't heard anyone discussing about ESG, so I want you also to address that topic, that most of the projects here in Zimbabwe, they might not meet the ESG standards that you tell the fund managers that if you want to put capital in Zimbabwe, they have to meet certain ESG standards. And to be honest, most of the people here looking for funding, they will not meet the criteria around ESG, even in mining, even in infrastructure projects. But the conditions at high level, when, for example, the German government, the pension funds, the universities that are giving these fund managers, they have those conditions. So effectively, they are not considering countries like Zimbabwe. So I want you to address that point so that everyone in this room, when they apply for this funding, they know exactly what they're applying for, and they have clear checklists to know that when they submit these proposals, they know that they're gonna pass those proposals, meeting all the criteria that you need. Then another point, I think there was a lot of mention that most of this capital, you link up with a lot of banks here in Zimbabwe. It's very also difficult for people here in Zimbabwe to go to a bank, find a loan. But if you see what's going in Europe, most of the money is going into private sector. We are no longer going to look for a loan in the banking sector. That's the old way of doing business, right? But here it seems like you saying if you want funds, you need to go Stanbic, you need to go through NMB, but you know in Europe, that's not the model that big fund managers are looking for. Myself, we look into projects in Europe, different projects, solar, data centers. We go to these individuals that have got good ideas. I can pick someone here. If they've got a good idea here, we go there, we help them to structure the deal, we help them around cash flows. But the last thing that we tell them is to go to the bank, look for the funding. We help them with the funding. Another condition that we put, we say, okay, we're gonna have one or two of our people sitting as part of the board of directors, or they guide you through the process. Because at the end of the day, if you give someone capital, let's say 200 million, you want that person to be successful, right? You want that person to make a return so that you can get our money. But we also want those conditions to apply to all these people here that are looking for funding. For me, I find it very, very difficult that BlackRock has got assets that are, I think we are sitting around 11 trillion assets under management, to an extent that we are putting a lot of that money into Bitcoin, because that money is sitting there, they're not going into good projects. As Ambassador said, that the money is sitting there, but some of that money was supposed to go to, to steel plants that we are building here in Zimbabwe. We still have core, if my understanding is right, but that money will not even touch that space, right, because of the ESG standards. So I just wanted someone from the panel to clarify those points. The first point I think I covered is around ESG.
Thanks,
The second
Abraham.
was the flow of money from big governments to
Okay, let's give him a round of applause. I think that's very pointed. I'm going to turn it over to the panel. Jim and Frank, these are some hot potatoes, but I think very valid and pertinent points raised. Jim, you want to give this a go? I'm hoping that we're going to get a EU private equity fund instead of the credit to the banks, right?
Yeah, I mean, I think what I'd like to say start off is that there is frustration, and I fully appreciate that frustration, that you are a very well-performing private sector. I think the ambassador mentioned earlier that there's even the EIB, we had one, I think in all the times we were here, post-independence to 2000 when the lending stopped, I think we had we only had two very small defaults in Zimbabwe. So overall, your private sector portfolio has been very performing. I understand the frustration that you have that the international community doesn't see Zimbabwe the way you would like to see it, and I think they have a different risk profile than people here based would see it. So I understand all of these things. It's also important to understand where the funders sit. There's a lot of talk about you sitting on boards, and we're not a VC. So I think some funders can work in different gaps in the marketplace. Some of them can't. The EIB was developed to work on large-scale sustainable growth in companies. And so that you'll see in Malawi, we're doing a 300 million road there. In Zambia, we've put well over 200 million into roads there. We've put about $500,000 into energy in the last few years in the sub-Saharan Africa area. This is where the EIB space is. And there's so much we can do in that space, and there's so much we can't do in that space. And I understand that I'm here, and so the frustrations come to me in that regard. But I think it's also important to realize that all the things you talk about bringing people here, about taking a risk, this is what we did. When I first came here, Gerald can tell you, and Solomon if he was here, and others, George was actually, Gubernataga was actually head of Barclays at the time we came here. You can tell you how long ago that was. And I brought 8 people to see Zimbabwe, because sitting in Luxembourg, and you read about Zimbabwe, nobody wants to come here, nobody wants to invest in here, nobody's interested. And it's not because they have a thing against Zimbabwe, it's just that there's other opportunities. My office in Pretoria covers 14 countries. I've been to Zimbabwe 3 times this year. There's some countries I haven't been to at all in the last 3 years, like Comoros. So there's a lot of effort we put in to Zimbabwe to be here, and that's why I said 10 years ago we brought an entire team down here to meet with you, to meet with the banks, to meet with the private sector. If you speak to any of the EU ambassadors, they'll show you how passionate they are about Zimbabwe. We've had previous IMFs people settle in Zimbabwe afterwards. So there is a great goodwill around Zimbabwe, and I think that's some of the things I try and convey to the government when we speak to them, is it's a great opportunity to interact with the international community, because there's a lot of goodwill to get Zimbabwe going. And I know that it doesn't sound like much that we're doing, but like I said to you, we're working in technically a default country. That is impossible. But it was just because 10 years ago, I spent months and years trying to convince member states, trying to convince the management committee to invest in Zimbabwe, and they did it. So I think that, I know that it's frustrating from your perspective, but there are a lot of efforts done to try and achieve this. I think you mentioned earlier about us being here, one of the first big development banks to come in, and my hope is that others will follow us. And in terms of our tenors, I know that a lot of the banks use us as the standard when they talk to other DFIs to say, well, the EIB offers this, why don't you offer that? So we're trying our best to meet some of your frustrations, but it's just important to understand what kind of an animal we are and what we can and can't do. We don't have a bias in Zimbabwe. Like I said, we're working in very difficult circumstances to be here, and it's only through the support of the EU delegation and the EU member states that we're able to achieve the little that we can achieve. It makes me sad when the energy, when you talked about all when people stood who are working in the infrastructure sectors, because I can't help you. And that is frustrating for me, because in any other country I can help you, but I can't here because of the legacy debt issue. And so that's not a decision I've taken personally or the bank's taken personally, but this is just the reality of being, of sitting with legacy debt. And we are trying our best. We've been innovative. I've spoken to the government many times going back over the last 10 years. I've given proposals on remittances and how we might structure that better. I've given proposals on how we might revive state-owned entities by moving them over to the private sector. I think whatever ideas you come up with, I've probably tried them at some point since I'm here, and that is way beyond my remit. We're a project-driven bank, so technically we just wait for projects to arrive, we assess those projects, we fund those projects. That's what we do on a technical basis, but we've gone really over the edge in Zimbabwe to try and see how else we could help. I'm really interested in how we can use remittances more effectively, particularly in funding private sector. A lot of people are remitting here for daily food, and this could be much better funded through companies that are providing chickens and agriculture products. There are ways we could do this. I'm trying my best. And the delegation is trying their best, and I just want to express that. And I know that we can't meet all of your needs, but it's just to let you know that we are trying, and we will continue to try. We're a long-term funder, and we do spend a lot of time here. Like I said, I spend more time in Zimbabwe than any other country, except South Africa, where I'm based. We've had due diligences here more than any other country, and we have a lot more lines of credit in Zambia, for instance, but we spend still more time here. So that's just a reflection of our commitment to Zimbabwe. And I just want to make you know that we continue to try. And it's not that out of ignorance that we ignore your requests and your pleas, and we just try our best to be flexible within the mechanisms that we have to meet those. And
thanks,
I'm
Jim.
hoping the DFIs do the same.
I think let's applaud him for his continued effort. Frank, do you want to add on to that?
Perhaps just I've been to answer to what Shanta said. I think it was just a complaint and a frustration. And I think the best we can do is to organize such a business forum from the EU delegations, that you know that it's not compulsory. We've put a lot of efforts from the ambassador to all the team, because we believe in it. And I think we want to do our best despite all the challenges. And people were questioning how many people from representatives from European companies we could attract. And we said we have no guarantee, but we want to take the risk and to do our best and to establish a type of benchmark. That's what we can do. And I think it's a lot of effort. It's not a walk in the park, because at the end, talking about all these banks, they don't have to work in Zimbabwe. They always have the choice between countries, between projects and companies. So we can ask them to make an effort to prioritize certain countries. And Zimbabwe is mentioned in the guarantee instruments that were mentioned in Jobst's presentation. But then at the end of the day, it is their decision. So that's also, I think there is a limit to what we can do.
Yes, I mean, ECG was mentioned earlier on, and this is where you come in, I guess. Technical assistance, the preparation, guys, is imperative. Maybe you can help the folks here understand how they can solicit for support.
Yes, sure. I would like also to maybe to mention something about regarding the legacy. So, as you know, most African countries, they are suffering for foreign currency issue. That's why we said also import substitution could be also one factor we can play in. And so one part is to say so to support the export, but the other one is import substitution. If I see the figures today was presented, Zimbabwe is spending around 9 billion for import. You know, so if we can, it is a collaborative effort. It's not only the government or the EU institution or private sector. All have to contribute, and then if we can reduce this import expenses, it can be used for other purposes. So there is a lot of potential even to structure this debt legacy with for instance, with different governments. It's possible, but it needs, collaboration between the private sector and the government. I see that it is possible. The other part is regarding ESG. So I always say to our investors in Africa, we say, our primary impact goal is to create jobs. So we focus mostly to say, so around 60% of the population is below 30. So we have to help the countries to generate jobs. So, and then the other ESG criteria, we can also support to fulfill. It's not so hard to achieve it, but it's good to have some ethics in the business. So this is what I can say.
Thank you. So, Nick, I'm just going to involve you, and I'm fiddling with an idea in my head. I mean, if, for example, let's talk about your outsourcing of product, and we talk aggregation. I'm thinking of the possibility that we emerge from this particular conference with some practical takeaways. And I couldn't help but see your video and then hear the ladies speak yesterday. They spoke so eloquently. Why can't we do a bond on the Victoria Falls Stock Exchange for aggregating all these farmers, for example, using your strong balance sheet?
I thought when I was coming here to raise money, not to
Well, we'll raise money with you. We're saying take us along with you. You've got the assets, right? And then we will aggregate all our produce. And I promise you, for a lower fee than the banks, I'll list you on the stock exchange. How's that?
Yeah, let's talk. Look, I think that the thing with small-scale farming, and we already have a small-scale farming program that we do finance. So this is an example of this sort of alternative finance model that was talked about by the gentleman from BlackRock. But this is private sector, non-bank business lending to the small-scale agriculture sector, and simply because those farmers are not bankable, there's no way that they can access bank finance, right? So we're already kind of doing that. And we actually, we did look at a structured product which we used to finance grain production maybe 4 or 5 years ago, financed by the pension funds. So it wasn't a listed instrument, but something like that certainly could be a listed instrument. And it was like an asset-backed commercial paper, 60-day, 90-day paper to fund seasonal crop inputs. It was a lot of work, very complicated. And in the end, small-scale agriculture is a very low-margin business, so there's not a lot of room for anything to go wrong, right? No defaults, no execution stuff-ups. You have to do it right. But it did work, and that was sort of in the days when there was the currency dislocation going on. You needed US dollars to buy your inputs, but you're getting paid back in Zimbabwe dollars. So it was trying to navigate through those waters. Something like that can certainly happen again.
I'm thinking here, Jim could provide the backing in Europe. There is a Zim bond that's being issued. Gerald here, who I'm inviting, if you can give Gerald the mic, he's the banker. He's dealt with you guys in Propaco. Gerald is there. And then I saw Chaitesh Msoni here. He's a private equity player. So I'm specifically picking on you guys for solutions. So Gerald, our banker, we are here. This topic is access to finance. And we can't walk away from this great conference, Gerald, and say we couldn't access funding. When you were there, Jim was here. Nick was here with the balance sheet. And the private equity player is there in Chaitesh, along with Abraham. So over to you.
Thanks, Nigel. I'm going to disappoint you. So I wanted to speak on the issue raised by Faith and Shanta on women. And I want to read a part of an extract from the term sheet from EIB. So it says, a part of the facility shall support projects contributing to gender equality and women empowerment.
That's not bad news. That's good news, Faith, for us, isn't it?
Yeah, so we have, I mean, I've spoken to Faith and said, when you look at the banks even here, NMB included, I think inclusion is also one of the main agendas. So notwithstanding EIB or the DFIs coming in, but for us, supporting women is good business, okay? What we have seen, I mean, we instituted a study to look at what are the needs and the challenges that women face in terms of accessing finance. But we've also done like a back testing of all the lendings we've done to women and then checked on defaults. We have discovered that women are better payers than men. Okay? And
I can confirm that on the microfinance side as well. Absolutely.
so you see, we have men who borrow money without an intention to repay it. Like they basically are just borrowing without the intention is not to not to repay. But I think with women, when they borrow money, even the impact it has, you know, a lot of that money is used to support kids to go to school, for medical. So the impact on society is greater when you support women. So we have set up a department within NMB called NMB Here, which basically looks at lending to women. And so I'm also inviting the women to approach us, you know, so that we can support you. I mean, to their credit, I think EU, through Propaco, we did get a facility, which is a risk mitigation facility, because one of the challenges that women face is the issue of collateral, where they don't have title. So we're also working on a risk mitigation facility that allows them to borrow without the strenuous requirements of collateral. Thank you.
Okay. Chaiteri Msoni, Charity, I see your hand. I just want Chaiteri to speak to private equity. We're talking about access to finance. Chai, are you in the room? Oh, he's consulting. Okay. Bring the mic to Charity. You good? Yeah, thank you. Guy, so ladies and gentlemen, some of the money that we need access is with this guy. Yeah, so.
I'm not sure, Nigel, what you want me to say here, but yeah, I think there's a need for capital across the whole continuum, right? So we sit in between, we like to, or the term is missing middle, where you've got your microfinance and all the other financing on one side, and then you've got your traditional banks. So we're in the middle where a lot of the SMEs find themselves, where they're too big now to access microfinance, which is expensive, and they're a bit too, not as big for the traditional banks because of collateral issues and that sort of thing. So we're playing in that middle space. And all the problems that you've related that, that we see in Zimbabwe also apply to us, because we're trying to raise money with the European institutions, which we have actually. That's how we started. We got a lot of support from the Dutch DFIs to get to where we are. But Zim's macro situation always stares us in the face when we try to raise capital. At the moment, we're raising Fund 2, and we're focused at the moment on raising it locally from local pension funds and other institutional investors. But the idea is that for us, especially, we're focused on SMEs. The idea is we're sector agnostic. The thing that interested me was what the lady said here and what you're talking about with the agriculture. So we don't do agriculture, we don't do mining, but we can do anything along the value chain. I like the idea of aggregating, because we can finance that space, the aggregation, not so much the primary mining. We don't do primary agriculture because we don't have the skills and we don't understand the risk in agriculture, but we can do the processing. So we could finance something that maybe Cicada is involved in, where they are getting so they manage the farmers, we give them the money to do the packing and the marketing, whatever. So that could work nicely. The only thing is that, like everyone else, we face the similar situations. Unlike the banks, our risk profile is totally different. So banks will get lines of credit, but I'll have a talk with Mr. Hodges there and see whether there's something we can do. We've spoken to EIB before. I know they've given money to, I think, 4 banks for SMEs. I don't want to get on the wrong side of Gerald in case I need something from him later on. But I think structurally, the way banks are structured, it's very difficult for SMEs to access the funds from there, because whilst the money may go there at good rates and things like that, they still need the things that they need. So they still need collateral. They still need 3-year audited financial statements. They still need this, that, and we're much more flexible in terms of the things that will allow when we're looking at a project, because we're looking primarily, is it profitable? Can it scale? Can it do this? So we'll structure an instrument that is unique to that particular situation, that helps that person where we can. So yes,
thanks,
there's room for that. Thank you.
So he's a man to watch. Gerald is one to have. Of course, Nick. You can see Ruveneko is wanting to destroy our very good conversation. Charity, last word before my panel gets just 1 minute to summarize each of them. Just 5 minutes, please. Ruveneko. We're talking money here.
Okay, so I said I'm an ex-banker, retired, but now I'm doing some community service. I'm the board member, the board chairperson for Small and Medium Enterprises Corporation, which is a developmental financial institution. So we lend to women. And so my dear sisters, you can come to us. And also we have come up with a women's product. Well, the amount is a maximum of 3,000 which has no collateral. Did you hear that? No collateral, but third-party guarantee. And we also work with ECGC to guarantee those loans. So ladies, even the gentlemen, small to medium enterprises, we are here for you. We fall under the Women's Affairs Ministry, and we're funded by government. We are funded by the Reserve Bank, and also international. Recently, we established a line of credit from an Arab bank. So.
All right, so at least we're answering to that cause. And gentlemen, lest you be a boy child and you feel left out, you have a sister, you have a mother, so just figure out what to do. Right, last word. Last word from our panelists before we pass it back to our director.
Yeah, thanks. I just wanted to say, my colleague reminded me, we actually have a blended finance instrument that we are about to launch. It's not directly related to agriculture, but there is a tranche in there that is for small-scale agriculture. And we'll be looking to our colleagues from the EIB and maybe the local banks to be participating in that instrument. The problem, as ever, is that in Zimbabwe you have to do things yourself. We can't sit on our hands waiting for someone to come and help us. We have to take action. We have to use the resources that we have, and those are many. And we have to go ahead and do it, and then people will follow. That's
absolutely
the message.
Thanks. Jim, your parting shot.
It's just that it's taken us 10 years to get here. I know it's a bit frustrating for you, but we'll be here for the next 10 years. We're going to be trying our best to support you going through that. We're working with the government. We're trying our best to help support the arrears clearance process. Once that's done, hopefully we can help you then investing in your PPPs and IPPs and infrastructure. So hang in there. We're with you. We're trying. We've been innovative as much as we can. We're trying to change our model as much as we can to be flexible to support you. And all I can say is we'll continue to do that. I'll continue to wave the flag for Zimbabwe. I think people who know me know that I'm very passionate about the country. I'll continue to wave that flag, and I think we'll continue to have the support of the EU as we move forward.
Fantastic. Thanks. Thank you.
Just as Nick said, I think you can only depend on yourself somehow. And I think that's really the first step, and to have good projects, bankable projects, and then talk to the right people. But I think that's really the first step, and it takes time, a lot of efforts. There is no Santa Claus who will come, and there is no miracle. It's a lot of hard work. I think the Zimbabwean people have worked a lot to have more than they could. And that's it, but it won't be easy, and we are not here to tell you that it will happen overnight. But I think we have like dedicated advocates and supporters among the international community.
Thanks once again to the ambassador for putting this together. I think they've just done a splendid job. Tadios, our last panelist.
We are interested to work with companies who are export-oriented, who can generate foreign currency. So if you are in this business, food processing, etc., so you can approach me. I will be happy to exchange with you some ideas. And also in renewable energy, if you have a project with the mining companies as off-takers, so a bigger project, we can also collaborate in this regard.
Fantastic. I think all that remains for me is to thank our distinguished panel and your participation, and then hand you back to our ever-present, glorious, wonderful. She allowed us an extra 10 minutes, Ruveneko. Thank you.
Thank you very much to the Nigel Chanakira for moderating that. I think there was something for everyone today in that session. It's just to say terms and conditions apply, right? So thank you very much to our panelists. Thank you very, very much. You may take your seats. Gentlemen. All right. At this point, I would like to invite us all for lunch. Can the first 4 rows please get onto their feet? If I could ask you to be upstanding. The first 4 rows. I'd like you all to please leave and head toward lunch first. There's a reason that's happened. I was whispered to in my ear. So please, could you make your way out? The first 4 rows. Thank you, thank you, thank you. Right, so we come back in here for lunch at 2 o'clock. I think that gives everyone some nice leg room. Hopefully time to dash somewhere if you need to, but please do be back on time for 2 p.m. We'll start promptly. And we'll continue the last segment of our engagements here. And as you know, tomorrow is B2B. So please come back with all the energy after a great meal from the Hyatt, and we'll see you at 2 p.m. Please may you all enjoy lunch, and we'll see you shortly. Thank you very much.
And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway. And in today's headline, we're proud to announce the first ever EU-Zimbabwe Business Forum, themed Unlocking Sustainable Trade and Investment under the Global Gateway.